Let's talk about the outlook, the longer-term outlook for loan loss provisions. I understand there might be some difficulty to make any conclusion on that, but can you give us some guidance on the outlook for loan loss provisions for the year of 2020?
Thank you. Yeah, let me just start with a couple of comments. So, Nordea is entering this crisis with a very strong position, with a very strong capital and liquidity position, and we also entering the crisis with a very well diversified and strong credit portfolio. But of course, there will be higher provisions due to the uncertain economic outlook. That is what we see in the Q1. Actually, we need, when we look at the provisions, we need to split it in two parts. The first one is you can say the net loan loss provisions for the quarter. These are quite low actually. They are 34 million euro. That is 5 basis points of our portfolio. So actually, it looked quite strong in the quarter. Then on top of that one, we have added a management adjustment of 120 to try to cover for the likely near-term impacts on our customer base near-term. So the question, of course, from you will be, okay, what is the longer outlook then? And that is too early to conclude about.
Good morning to you, Frank. Yes, it is very early and there are many variables. What is the single biggest issue? Is it your exposure to oil and energy? Can you quantify that for us? The scale of your exposure to oil and energy, and more importantly, the level of those loans or credit that you've made that are in a risky position of having to be provided for?
Yeah. So if we look at the most exposed sectors, you can say, then you need to remember before we answer that question that we are a very big retail bank with also a quite big corporate book. But the corporate book, when you look into which sectors we are represented, is not that big actually within these sectors. So actually, when we look at the the sectors that is expected to be most impacted by the directly impact from Corona now, then we're talking about 9.5% of our loan portfolio. And then I'm talking about maritime, retail trades, air transportation, land transportation, oil, gas, and offshore, and so on and so on. So it is not that, of course, it's a substantial number, but it's not that big an amount. And we have well coverage for well coverage when it comes to provisions within that portfolio already. So of course, it's hard to say what will happen within that portfolio. But what we did was, as I mentioned, we added a management adjustment of 120 in this quarter. We had with the earlier management adjustments we have had done, we have now total 327 million euro in management adjustments, leading up to a total allowance of 2.4 billion euro covering the loan losses. And what it will look like in the coming quarters is too early to say. Pretty simple.
Okay, so still too early to say about coming quarters. In terms of corporate cash buffers taking a massive hit just generally, Frank, from the coronavirus shock, I'd like to get a flavour of how more demand for corporate loans, specifically for revolving credit facilities, what that looks like for you and whether it means that the bulk of impairments may be booked in the second quarter.
Yeah. The activity level has been very high. We have had a pickup of 30% in the quarter in relation to corporate meetings or interactions with our customers. You can say that the amount of loan applications in March has been 13 billion euro. So we are talking about quite a big numbers. I think when you look at our customers, they are generally in a very good shape. Of course, they are concerned, but they have been quite fast to try to stabilize the balance sheets and their liquidity positions. Then, of course, we will, longer term, we will see a risk migration potentially. We will also have a macro update, and that we will do later on in accordance with the guidance from the regulators. And what that will lead to is too early to conclude.
Frank, what is going to change? What is going to materially change as you deal with this evolving world of COVID, shutdowns and reopening? Are you going to have to look at lending standards? How are you going to operate going forward? Are there going to be new risk metrics? What are you and the board considering implementing as leads of the bank in terms of risk going forward?
When you say risk, when you say lending standards, so try to help me so I can
lending
answer
standards,
question,
will you tighten the lending standards? Will you stop lending to certain sectors? What's the view at this stage?
Yeah, so what we need to remember in the bank is that it is not now you should change your credit policy. That you should have done for a long time ago. So when you're entering the crisis, you enter the crisis with a strong portfolio. So if you don't have done that, then of course you will have a pretty tough time potentially now. What we need to remember is that if you look back on Nordea's track record on credit losses, it has been very strong. Looking back to also the financial crisis and the way we came out of that one and handled the crisis, we grew the business at the same time as we handled the risk side. That is because we have a very strong credit culture and we have a strong credit book. And then we also need to remember that the last couple of 3-4 years, we have de-risked the bank. We have left non-Nordic markets, a lot of them, several of them. We have left or exited certain segments where we thought that we saw the risk was too high. For example, also oil and offshore. So we stick to our credit policy. We of course are cautious, but with the capital situation we have, with the liquidity situation we have, and with the credit portfolio we have, we are here to support our customers.